You cannot get a panel as big and as better than this. We've got Swaminathan Aiyar, the consulting editor of ET now, and we begin the discussion right away with him. Swami, the big question is, and we've got Uday Kotak, we've got Arvind Mayaram live, the Department of Economic Affairs Secretary, KV Kamath, and of course, Vaisi Deveshwar. Swami, the big question, when we went into the budget speech, you said it's a good time to be a bull. You still agree with that?
Short term, I've obviously been proved wrong. Long term, I still believe I'm right. I mean, I would say this is a cool budget at a time when finance ministers are normally suffering from election fever. No sign of delirium. It's very easy to forget that this is an election year. It's very easy to forget that there was a strong expectation among lots of people that there has to be something equivalent of the farm loan waiver. That, Congress is in a desperate position politically and it has to pull several large rabbits out of the hat and throw these freebies around. The fact that that has not happened, I find, is somehow being ignored. Everybody is treating it as though, this is some kind of kick-starting budget, and he hasn't done that amount of kick-starting. I would say it is an astonishing feat to have produced the fiscal consolidation along with 29% increase in planned spending in these kind of conditions. Caveat, many of the revenue projections are looking very optimistic. It appears he's talking about a 19% increase in tax revenue at a time when nominal GDP growth according to the budget is going to be up only 13.4%. I have one further question. The budget says nominal growth 13.4%. But if GDP growth is 6.5%, it means he's projecting inflation of 7%. Isn't that much too high? I mean, would that not constitute some kind of failure of the whole strategy?
Right. I want to get Uday Kotak in on this as well. Uday, you were also pretty optimistic on the budget soon after the FM speech when you joined us right here on ET now. Do you agree with Swami on the assessment that it's a good feat that he's managed to keep the fisc in shape? If that's the case, then what explains the reaction that we saw in markets today?
I take this opportunity to compliment the finance minister and the entire finance ministry team for producing a responsible and a realistic budget at times like these. And it is a huge credit for keeping this head on shoulders and discipline. The question about markets short term is that markets have tended to need steroids from time to time on the budget day. And this budget is focusing on long-term good medicine rather than short-term shots and steroids. And that is what the market always tries to expect. And I think it is unreasonable to have these steroids when we are building long-term fiscal consolidation. And I am actually quite pleased with the way the whole structure of the budget has come out, particularly rural expenditure, which is continuing to be done. Second, mass housing and the incentives given for mass housing. Third, the whole area of increasing financial savings and getting focused so that we move away from Indian investors' appetite for gold. Therefore, there is a well thought through plan which has been put into action. And that is extremely good as I see it. It is realistic. Do not expect blowout wonders overnight, but a steady batting on a difficult pitch.
Right. There's cricket and there's a whole lot of pharma that Mr. Uday Kotak wants to talk about. He doesn't want steroids, he wants long-term medicine, and a whole lot of congratulation pouring as well. Let's get in Arvind Mayaram into this discussion. 4.5% is the Q3 GDP that has been reported just today after the budget was announced. You still believe 6.5% is achievable? And as Swami is pointing out here, some of the revenue projections look rather very, very optimistic.
What we have said in the economic survey, and then later Finance Minister also said today, the growth projection is anywhere between 6.1 to 6.7%. This wide range also is because we live in uncertain times, but we are certainly looking at something which is more than 6.1% and could go up to 6.7%. Now, if you consider that to be the growth, then I do not see why we should have skepticism about the other factors, including the revenue buoyancy. If you look at present context where you are saying 4.5, I'm saying it is Q3, let us wait for Q4. And if you look at the past 5 or 7 years, I haven't gone beyond that, you would see that the final estimates of GDP growth have always been better than the advanced estimates. So we do not have any reason to be pessimistic this year. We believe that the final GDP numbers would be better than the estimates that we are getting now. And they would be, I still believe they would be somewhere close to 5.5%. It could be 5.4, it could be 5.5%. Now, if we take that as the number, then in current year, if you look at the revenue buoyancy, it has been somewhere close to 16%, 16 point some percent. And if we are going to have a higher growth next year, why should we doubt that we should go up to 18%? Now, the additional 1.5% that you're seeing is coming from additional revenue measures. So as far as we are concerned, the numbers have been done very carefully and they are very credible numbers, and there is no reason not to believe those numbers.
All right, let's get the industry view as well. YC Deveshwar, chairman of ITC, joins in as well from Kolkata. Mr. Deveshwar, the point that Mr. Mayaram was making, that there's no reason to be pessimistic about growth in FY14, but the budget math is based on assumption that the economy will grow at 6% plus. I know Uday Kotak in the panel doesn't quite agree with such an optimistic projection. What's your sense? Do you think we can do 6% plus at a time when Q3 GDP is as low as 4.5%?
See, the issue basically is in revival of the investment sentiment. I agree that the challenge before the economy, before all of us, is very substantial. I agree also that the GDP figures as of now, by themselves won't inspire confidence. But if you look at the 360 degrees interventions that he has made selectively, touching all segments of the economy, I would say that people would begin to look up and begin to invest in the Indian economy.
Yes. Mr. Mayaram, if I may come in with one question. Your budget papers say that they are projecting a nominal GDP growth of 13.4% for the next financial year. Now, if you are going to have real GDP growth of about something like 6.5%, that is implying an inflation rate of 7%. So very far from bringing inflation down, I mean, from the last time we had a reading about 6.5%, this is suggesting that things might even get worse. I'm very puzzled by this because the aim of the fiscal consolidation, I thought, was to reduce the inflation rate even further. This is why we get to the issue of projections, that we already seem to have an assumption of 13.4%, as a result of which we are getting this 19% growth of revenue. Now, if that inflation rate is really going to be much less, then...
some problem with the audio.
Oh, sorry. Let me briefly repeat.
There's no sound.
The budget papers say you are projecting nominal GDP growth of 13.4% for next year.
Swami, I think we're trying to get that link with Mr. Mayaram fixed in just a moment. We'll get that question going the moment that link is solid. But I want to get Mr. Kamath into the discussion as well. Mr. Kamath, the big picture, do you think this budget has done enough to kickstart the economy? Mr. Kotak agrees, he thinks it has. YC Deveshwar is also equally optimistic. What's your sense?
What I saw so far of our industrialist was that everything was on the back burner. I think they are now reaching out to that back burner to try to see whether they can move things to the front burner. If industrialists don't do it after this budget, I think their animal spirits they might have to relook at. So yes, I would think that this is a budget which says that we are still in calm waters, we are still one of the best performing economies, and you need to now take a look at investing, and I think this signal the industrialists will take.
We've been speaking about numbers, whether they are credible or not. I specifically want to speak to you about fiscal deficit because that was really the big concern on the street. He's reined that in at 5.2 for this fiscal and projects 4.8 for next fiscal. Many people believe he will perhaps be able to achieve it, and Swami also is very bullish on that. Do you think, that's achievable, and is India then on the path to a very low fiscal deficit thereafter?
the budget papers project nominal GDP growth next year of 13.4%.
Yes,
if we take
I can hear you.
Real GDP growth at roughly 6.5%, this is implying an inflation rate as high as 7%. Now, with fiscal consolidation, inflation really should be coming down. With that, this nominal growth of GDP should be nowhere near 13.4, should be closer to 10, I would have thought. I'm trying to understand this because, if this particular thing is of 13.4 is exaggerated, equally it would then appear all the tax projections based on this would also be exaggerated.
Okay, I still think there is a glitch with that line with Mr. Mayaram. I still don't think he can hear us. Mr. Mayaram, if you can hear us, you nod out there. I'm going to come back to you for a question. But Swami...
Can I ask Uday?
Yes, sure. Uday Kotak, Swaminathan Aiyar has a question for you here.
Uday, I would like to ask you,
sure.
Has the market satisfied itself on this question of what is going to happen to the Mauritius route? I know the finance minister was asked at his press conference on this Mauritius issue of are we having a situation where guys are going to fall into the tax net? And he talked at length about things like royalty and dividend and interest. He did not mention the word capital gains, whereas I would have thought the entire focus of the foreign investors should be what is going to happen to capital gains. If you have to prove that both you are a beneficiary and a tax resident, then perhaps guys who are holding PNs, participatory notes, that even if they are going through a tax resident in Mauritius, they may not, the direct beneficiary may not be in Mauritius. So I think the fear was that the way it's being interpreted, capital gains may suddenly be subjected to tax. I thought this was a big fear. Since you are a market man, have you gone into this? Are you satisfied with the finance minister's statement? Do you believe that there is going to be no capital gains tax on PNs and other fellows using the Mauritius route?
Swami, the sense I got from the finance minister's talk, and this is again what I've picked up, is that it refers to beneficial interest, and his focus more was on round tripping, which is Indian money going to Mauritius and coming back, where the ultimate beneficial interest is of an Indian resident. And I would like to believe that with the clarification on beneficial interest, if it is coming from countries outside Mauritius rather than from India, there should not be a problem. But that's the sense I have got in terms of his clarification.
But if I may stick with you there, the fact, you're saying it doesn't matter if it's just the Indians. To me, if the totality of the money that was coming in is seriously affected, and that same Indian who had managed to keep his money abroad just pulls the money out of India to put it in Singapore or somewhere else, surely you do get a very substantial outflow of money which was earlier coming in, believing there would be no capital gains tax. Therefore, will there not be an actual impact on the total flows?
Swami, if the beneficial interest is of a foreigner, whether it's anywhere in the world, as long as it is a foreigner, and the beneficial owner behind that is not an Indian resident, then I think the sense I got is things should be okay. And obviously, if it is an Indian's money overseas, then the government of the day cannot accept it as legitimate.
Right. Mr. Mayaram, are you on? Can we talk now? Can you hear me?
Yeah.
Okay, Mr.
Yes,
Mayaram,
I can.
Let's finally get this question through to you. The budget papers make a projection of nominal GDP growth of 13.4% next year. Since real GDP growth we are hoping will be around 6.5%, this implies an inflation rate as high as 7%. Now that to my mind is disastrously high. I thought this fiscal consolidation, everything else, is supposed to be bringing inflation below the latest wholesale price level of 6.6%. It shouldn't be going in the opposite direction. So why do we have this somewhat alarming figure of 13.4% for nominal GDP growth? If I'm wrong about the 7% inflation, suppose it's only 4%. In that case, the nominal GDP growth should be only about 10.5%. On 10.5%, then your revenue projections truly begin to look very optimistic. So please just clarify, what are your assumptions on inflation?
See, the formula by which you arrive at the nominal GDP growth is a little more complex than what you have looked at now. Basically, we are looking at 6.5%. That would be the kind of level of inflation that you're looking at, and 6.5% is the growth. There is a more complex formula which I will not get into now, because there is a calculation which is done to arrive at that, and then you discount a bit of some numbers on there. But what we are basically saying is that if you are looking at 6.5%, that is going to be the growth, and around 6.5% will be the inflation. That is the number that you would get, this 13.4 or so. Now, the important thing here is the worrisome part is that whatever is stated as a number, there is always a credibility issue. So if we keep the number very low, then you question us why it is very low. If we are keeping the number a little more conservative, you are also still questioning us why we are keeping it at a higher level. Now, we are very clear on one part, which is the growth is going to be somewhere between 6.1 and 6.7, as you have seen, and the finance minister has also said the same. The economic survey also says the same. We are hoping it will be closer to 6.7, but anywhere in between that, depending upon large number of circumstances, we are going to be getting the growth. But inflation is moderating, and therefore we expect inflation to come to around 6. Hello, can you hear me?
Yes, we can. Yes, we can, Mr. Mayaram. Continue.
Sound is gone again, I think.
Okay, we'll try and get that back in. But Uday, I want to come back.
I lost the sound somewhere there.
Sure, we'll try and get that link back, going back again. But Uday, I want to come to you again. The point that Swami was chatting with you about, the whole fear of this tax treaty clarification that's come in. So in a sense, would you say that the market reaction today was largely knee-jerk, and once a clarification comes in from the finance ministry, it will be business as usual for our equity markets? And what is the clarification that the market is seeking from the government?
I think the market had nervousness on 2 points. One was on this FII business, and the second was that the government borrowing program, the gross borrowing program, came at 6,29,000 crores, which had a net buyback of 50,000 crores. But market got a little nervous about the gross number. The market was expecting the gross borrowing number more like around 6 lakh crores. So the last 30,000 crores made the market a little worried about bond yields, as a result of which, since government securities yields moved up, there was some pressure on banks, which had the biggest loss on the index of close to 4%, while the overall index lost about 2%. And the primary driver there was worry about yield increases because of gross government borrowing program. I think if the government is able to clarify the situation, and it has done some of it this evening in terms of clarity on the FII side, as well as the implications of the gross and the net borrowing program, that will help the markets stabilize tomorrow. That is my view.
I'm actually just waiting for Arvind Mayaram's audio line to come back up, and I think that's the question we want to put forward to him. Who better than him to explain what is this whole deal really on? Is capital gains exempted, and why is nobody really talking about it? I'm waiting for Mr. Mayaram's line to come back, but let's just take this question to KV Kamath, because the big picture is that it is a bullish budget. Swami is happy with it. But Mr. Kamath, do you believe this budget makes a case and gives RBI enough elbow room to go ahead there and cut rates aggressively?
See, what this budget does is, I think, clearly articulates we need to attack A, the fiscal deficit, and B, the current account deficit. And it is through this route, then you give comfort to the monetary policy authorities that they can take the next step in terms of expecting lower inflation. And if inflation is expected to be lower, you then have the conviction to actually lower interest rates. A. B, the fact that you peg the deficit at a lower number, the market itself, starts working on a lower interest rate expectation. So I would expect interest rates to move down.
Okay, from investment, let's talk about consumption as well. Mr. Deveshwar, there's been a fair amount of concern surrounding India's consumption story, and many believe that the government should have probably not taxed the consumption story. You know, you pay higher tax, restaurants pay higher service tax, mobile phones you need to pay higher tax, diesel cars are being taxed at a higher rate as well. Do you think that's a bit of a dampener, or do you think that's not going to hurt the consumption story?
No, basically he has not, the indirect taxes, there has been no change in the rate of taxation. As a matter of fact, the pre-crisis period, the indirect taxes were higher than what he has left them at 12%. So he's been very selective in taxing those elements that needed to be taxed.
All right, gentlemen, stay with us. We need to slip into a short break here on the verdict with Swami. But on the other side, more clarification from the Finance Ministry. We've got Uday Kotak, KV Kamath, YC Deveshwar, and of course, Swaminathan Aiyar debating the big budget. Back in a moment with lots more on ET Now. Mr. Kotak, we've got Arvind Maharam back live with us. We've sorted the link. Is there any question that you've got for Mr. Maharam? Any clarification that you think that the market and corporate India needs right now, specifically with regards to those tax residency certificates?
Mr. Maharam, first of all, compliments to you for producing a very responsible budget. The markets today, one is concerned about this FII issue, which I think the Finance Minister has also clarified. And the second was on this gross borrowing program, which markets felt, the bond markets felt was a little higher than what they had anticipated, and that is also linked to the buyback program within the gross borrowing program. Therefore, if there's a way for you to give some comfort on these 2 points, it will certainly help markets. So that was point number one, which is more short term. And the second point is, in this budget, we have seen focus come back to financial savings as a key priority for the government. The question which I have is, could we have done more to give a bigger boost to the financial savings piece, considering your constraints?
Thank you first for acknowledging that the budget is balanced. I think that was the entire exercise was for consolidation, for providing a strong foundation for a more certain growth trajectory to be followed. Now, on the first issue that you have spoken of, I think there is a misunderstanding. If you look at the double taxation avoidance treaties that have been signed with a large number of countries, around 80 countries if I'm not mistaken, there are 2 requirements there for you to be able to get the benefit of the treaty. The one requirement is your resident status. And the second requirement, in many of the benefits that you are looking at, the second requirement is also who the beneficial owner is. That is the beneficial interest, beneficiary interest, as you had rightly mentioned. Now the question is that as far as the residence is concerned, there can be 2 ways of looking at it. One is that the tax authorities could question whether a certificate in itself is adequate to establish your residency. This amendment very clearly states that as far as residency status is concerned, if you have a certificate from that particular jurisdiction, then your residency shall be established, it would be accepted. The second issue is whether residency certificate is enough to establish whether you have a beneficiary interest, and that the answer to that is it is not enough, and that you would have to establish your beneficiary interest in a particular transaction. That I think is true for all the treaties that they have been signed. They were part of the treaties much before this amendment was brought in, and this amendment is only for clarifying the position so that subsequently there is no doubt either in the mind of the taxman nor in the minds of the investor. So to that extent, I don't think the reaction should be in the manner in which it has been brought about. But as the Finance Minister has said, even then, if there are any doubts or any questions in this regard, then the Finance Ministry will issue necessary clarifications to allay any fears that may arise from there. So to that would be my answer. As far as the savings is concerned, as you have rightly said, this is, in fact, if you recall what the finance minister said, was this is just the first step. This is not the final word on what we are going to be doing through the next year. This is just a beginning. This is a broad framework. This is a broad picture which has been painted, and within that a large number of other steps also have to be taken. For instance, Reserve Bank of India has advocated inflation index bonds. That is under consideration, that would be looked at. Now, so there are large number of other measures that will come. As Finance Minister said, they will be rolled out through the year. And we have a tough year. We have a tough year, but we have a lot of tough action that we need to put in place. But the one confidence that we have is that whatever is being said is credible, and we will walk that path. And all that which is required to be done to make it happen will be done. I think what is important is for you to look at the Mool Mantra, as the Finance Minister had said, which is growth, which is equitable, which is inclusive, and which is sustainable. And I think there are very large number of measures which have been spoken of in the budget itself, and we'll be building on those. So I think you will see all that unfolding through the year.
Right. Mr. Mayaram, I still have a clarification, and Swami and I were discussing this here. Certain quarters of the tax department seem to have clarified that the tax residency certificate does not really apply to capital gains tax. Would you want to clarify for once and for all, is that true?
To be really honest, Supriya, I would not venture into that area because I don't deal with tax. I can only speak to you the general principle, but specifics, I'm very sure if there is any doubt in anybody's mind, they can write to the ministry, and it would be fully clarified to everyone's satisfaction. As Finance Minister has said that if any clarification is required, that will be provided. So I don't see any apprehension of that count, but on a specific question, I do not think I would have the answer.
Fair point. Mr. Kotak, come in on what you've heard from Mr. Mayaram on the clarification as far as the tax treaty is concerned. Does that, in a sense, address most of the concerns? And to the other point that you made on more being done to incentivize equity investment, is that a big disappointment really from an equity market point of view that, in a sense, the government has lost the opportunity, at least in the budget?
I think on this area of equities, the way I look at it is the budget has certainly given a clear message that financial savings are important. And as we are hearing from the Finance Minister and Mr. Mayaram, if there is more which will be done through this period, that will certainly be helpful to get Indian savers back into equities and away from gold. And that, I think, is the key. How do we get Indian savings remain in India into equities and financial instruments in India rather than getting exported into foreign gold? And that is comforting that there is a focus on it.
Swami,
Mr. Mayaram, if I could engage you again, on service tax, there's this huge 35% increase in service tax receipts. Almost 50,000 crore extra is going to come from there. And it would appear that a significant amount of it is going to come from a kind of voluntary disclosure scheme. So that's not quite the phraseology used by the Finance Minister. Now, can you explain the details of this? The Finance Minister said that you had as many as 17 lakh registered assessees for service tax, of whom only 7 lakhs were actually paying up, the others had just stopped paying. Now, to say, why don't you please disclose something, sounds extremely weak to most of us. The question is, why aren't you going after those guys? And not only that, I mean, if they were paying service tax, were they also paying income tax? How much income tax were they paying? After all, if you got a substantial service industry, presumably there's a decent income. I mean, there's this business of the missing middle. That this missing middle, all kinds of small entrepreneurs, businessmen who are just not paying any kind of tax, be it income tax or be it service tax. Don't we have to go after them much more aggressively than just hoping this voluntary disclosure?
I think there again we have this entire issue of what is more aggressive and what is less aggressive. If you remember, there also earlier on several channels we were asked this question whether the government is being very aggressive on tax. So the question is, I don't know which perspective one should take, but one thing is very clear, which is, one, if you have seen what the finance minister said in his press conference also, technology is being used in a very big way. On the direct taxes side, if you know, there is now a huge area has been plugged only on account of use of technology, where the matching of people who are filing, for instance, tax deducted at source, but the final returns not being filed or final returns giving different numbers, all this is now being tracked by technology, which is, there's a very powerful algorithms which have been written, and based on those the tracking is happening. So similarly we will need to move in the same manner on the indirect taxes side also, but it's a little more complex and it will take a little time. However, to say that the tax people are not going after those who are paying, not paying taxes may not be correct. In fact, the numbers itself, now that the finance minister has said this, revenue secretary has said this, that 17 lakh are registered and only 7 lakh are actually filing returns. They didn't say they are not paying tax, but they're actually filing return. Clearly means that now a tracking is happening, and those who are not filing return are being now asked to file returns. In fact, in this budget, if you see, kind of an amnesty scheme for those who have not paid taxes for the last 5 years, but now they come and pay taxes, therefore no questions will be asked and they'll be allowed to pay taxes. This has been brought in only to bring greater compliance on the service tax side. You must remember that service tax is relatively new compared to other taxes which have been enforced for a very long time. And therefore, more and more people are now being brought under compliance. But it is going to happen.
Right. Mr. Mayaram, I'm going to leave the field open to you. Do you have questions for Uday Kotak and for Swaminathan Aiyar? They've asked questions to you. It's perhaps time to turn the table.
No, I think what I hear from both Swami and Uday, I think is very encouraging, because I think this is a very responsible analysis and evaluation of the budget. Unfortunately, on the short run, everybody looks for less taxes, but yet more revenues, less deficit, more expenditure. It's a kind of a schizophrenic approach to budget which you see most often in the short run. I feel very reassured when I see this kind of an analysis which is looking at the budget in the manner in which it was supposed to be seen, and who are also seeing that it has very strong foundation is being laid for future growth. And to that extent, I think everyone on the panel is on the same page, including the finance ministry, which I must say rarely happens.
Mr. Kotak, I know you're in a rush. Before we let you go, a final question that you have for Swami or for Mr. Mayaram?
No, I think, Mr. Mayaram, I just wanted to focus more on what is under your direct charge. And I would love to see more, particularly for equity capital markets. And as you said, this is just the beginning. I would really like to see the revival of equity markets over the next 1 year. It is close to my heart, it's close to our hearts. And you are the man, and along with the finance minister, is it something more we can do to boost confidence of savers back into Indian equities over the next 12 months? That's my number one calling in a way.
What is it that you'd like to get done, Mr. Kotak? Stuff that didn't get happened. Specifically, what would you like the government to focus on as far as revival of equity markets is concerned?
I think maybe a little more aggression on the Rajiv Gandhi equity scheme, whether down the year, through the year, anything more can be done. That would be useful in terms of getting the saver come back and put his money to work. The second, again a small point, is you've made KYC much easier with reference to the bank KYC valid for insurance companies. Could we extend the same for mutual funds as well, so that KYC done by a bank is valid for mutual funds as well?
Mr. Kotak, just stay there for one final time, because I'm going to ask Arvind Mayaram how much of this is really on his radar and how much of this does he plan to deliver. You've done enough for capital markets, but a whole host of experts, and I know Swami has a very contrary view to this, the fascination for gold that Indians have. Many people believe while you've tried to dampen the fascination, you may have not done enough.
Okay. All right. Now let me start with the first part, which Uday had raised. I think that's very critical and important. If you look at para 95 of the finance minister's speech today, there's this entire section on capital markets. And the interesting thing there is that these announcements have come after finance minister had very extensive interaction with the stakeholders in the markets, both in India and abroad, in his road shows. And the kind of reactions that we had seen during these road shows, or his interaction with the other stakeholders in Mumbai and other places, they are all, most of them find reflection in the kind of reforms that he has enumerated in his speech. So the important question here is whether the government is responsive to the markets and to the requirements of the market, and the answer to that is yes. I don't think this is one or two issues that you've raised today are going to be enough to bring greater interest in the equities. We believe that through the year we will have to work with all of you, and we will have to see that equity markets strengthen, that people go more into equities, they go more into savings, and it's a continuous work. It doesn't stop here, it doesn't stop with the budget, and we are quite confident that we will work with all the stakeholders to make the markets more buoyant. That's the first part of the answer. Supriya, you raised the issue about gold. You must remember that the interest in gold can only go down if there is a greater confidence in the government's steps that are being taken to contain inflation, because basically gold is what is inflation proof as far as people are concerned in terms of their investment choices. And now that we believe fiscal deficit is being brought under control, there are other measures that are being taken, inflation is going to come down. There is the prediction of the Reserve Bank of India, that is the prediction which is being made by most of the economists, that inflation is going to come down significantly during the course of the next year and the year after. And therefore we believe that already there are now signs that interest in gold is going to abate. We are also, as I mentioned earlier, looking at some other instruments which may be then in competition with gold as far as investments are concerned for savings. And these include inflation index bonds and so on. So I think there is a conscious effort to ensure that there is greater confidence of the investors in instruments other than gold. And I think you will see the results in the coming months.
Just hold your thoughts there, because I want to bring back the discussion to Swami. The big question really was that the ratings agencies are keeping a very hawkish eye on you. They were watching very keenly for the budget. Swami, do you believe the ratings agencies' fears have been addressed? Because S&P today has said that nothing really changes as far as the union budget is concerned.
Well, the rating agencies have focused above all on the issue of the fiscal deficit. Out there, the finance minister has delivered, provided you believe that his projections are realistic. I think one has to add this. Yes, I have some skepticism as to whether the revenue buoyancy is going to be as much as he has projected. On the other hand, I'm also skeptical. I'm very skeptical whether planned spending will actually go by 29%. We had Monte Carlo earlier who pointed out that, ministries are by their nature not easily geared to massive acceleration of spending. By the time they get their forms and their procedures in place, half the year is almost over. Therefore, I would say I wouldn't be surprised if there's some shortfall in revenue, I would also not be surprised if there's a significant shortfall in the planned spending. On balance, I think it would be possible to stick to the fiscal targets. So from that point of view, I think the rating agencies should be satisfied. One question which nobody has actually brought up at this point actually is that, this is an election year. What does this do to the UPA's election prospects? I mean, I would have thought that this is a question to be put forward.
Swami, we have a political debate. We have a political debate lined up. We have a political debate lined up as well. But before we thank Mr. Arvind Maharam, I want a quick word in on how he sees FII flows going forward. Mr. Maharam, the rally that we've seen in equity markets through the course of 2012 and early part of 2013 has largely been FII driven. There is some amount of nervousness right now in the market, especially within the FII community with regards to the tax treaty provisions. Are you hopeful and confident that FII flows will continue to be robust, because that's critical for our equity markets and even for our current account deficit?
I'm quite confident about the FII flows, because ultimately the FIIs also look at the fundamentals of a country's economy. And now that we are a little more credible in our projections, I believe that the flows, which have been pretty strong, if you have seen from January onwards, there has been a surge in FII flows. I think they will continue. This minor question of understanding of law, I think, will be resolved. And I do not see any reason why the FII flows will not continue strongly during the course of the next year.
All right, Mr. Arvind Maharam, thank you so much for coming in live on ET Now, on Verdict with Swami, sharing your thoughts, answering all those questions from Uday Kotak and Swaminathan Aiyar. It's been such a pleasure having you come in on the Verdict with Swami with that clarification of the Finance Ministry on this budget. Like Swami is saying, we're calling it a practical budget. In fact, Swami is very generous. He says it is a great budget, so to say. Hopefully the numbers will add up at the end of this year as well. We'll take a short break, but when we come back, we'll continue the debate. Special guests joining in, N.R. Narayan Murthy, Montek Singh Ahluwalia. We've got YC Deveshwar as well, Chairman of ITC, and Swami, of course, stays in for the debate. Keep it with ET Now. Back in a moment.
You with us right here on The Verdict with Swami, and of course joining us with a very rare post-budget analysis is the Chairman of ITC, YC Deveshwar as well. YCD, the Finance Minister today indicated that when he runs out of options to raise revenues, he turns to tobacco companies. Does that put you in an unenviable position, really?
Well, he has said that he's run out of other options this year. I hope that in the future, when there are other options, he'll spare us.
But what kind of an impact will this really have, the additional duty that it have on ITC? I mean, cigarettes are soon seen to be the big revenue grosser, but they're also seen to be the first things to be taxed.
Well, it is very elastic, because the reason why it is elastic is because there are other forms of tobacco consumption, and where the consumption shifts. As you know, that only 15% of tobacco consumption is in the cigarette format, and much of the tobacco consumption is in other formats. So I think let's leave it at that. This is not the point. We would like to, I want to empathize with the challenging task the Finance Minister has got, and I would like to support him to get the economy turned around.
Fair point. Mr. Deveshwar, let's also talk about the controversial super rich tax. CII and other industry bodies before the budget said it will be a sentiment dampener. What's your sense? Does it hurt sentiment at all? What do you make of it?
I think 1 year, I think this is not a big sacrifice to make for those who earn more than 1 crore. At the end of the day, to make a little bit of sacrifice to get the country on the path to growth is not such a big demand on people who are well-to-do.
Swami, comment on that. Are you hopeful that this will just be a 1-year thing, because it's going to be tough for for any government to now cut down the tax on super rich, because politically this is a good thing to do, isn't it?
it has come and been reduced in the past. So there's a precedent. I mean, back in 2003, they put a 10% surcharge, and later on, after 5-6 years, they removed it. So it can be done. It's not that difficult. But I think I'd like to highlight one thing. It is not really 10% surcharge at all. It is a 10% surcharge only on what you might call earned income. To the extent that they're getting dividends, they don't pay anything more. To the extent they're getting capital gains, they don't pay anything more. Therefore, it's not really a 10% surcharge on total income. There will be lots of people, if they are just receiving dividends and they are just receiving capital gains, a very, very rich person doing that may pay no extra tax at all. So I certainly would not call that a high burden.
And that's taxable income after all, and with way too many people who make that income. Maiti Deveshwar, thanks very much for doing this interaction with us on Budget Day with your take. Always a pleasure to have you. But the big voices don't seem to come on ET now. We've got Montek Singh Ahluwalia, the Deputy Chairman of the Planning Commission, and of course N.R. Narayan Murthy joining us for the next leg of this debate. Let's begin with you, Mr. Ahluwalia. The common assessment is that Chidambaram has announced no big bang, game-changing ideas this time around, something that he's always been popular with as far as his budgets are concerned. As a part of the same policy making, why do you think he hasn't?
You know, I think when you're in a difficult situation, the notion that you somehow pull rabbits out of a hat by game-changing announcements is actually, in my view, somewhat misconceived. That kind of thing actually only leads to hasty, knee-jerk reactions. I think the budget has actually sent the correct signal. There are no populist expenditure expansion programs which many people had thought that the government would be under a compulsion to undertake. That's good. It has given a clear signal that fiscal consolidation is important. That's good. It's taken a whole number of sectoral initiatives and put them together, talking about infrastructure, financing for infrastructure, building on stuff that has already been done. It's not disrupted the basic tax regime. I think that's exactly the right thing to do. And frankly, when you're caught with a slowdown in growth, the important thing is not to pretend that the budget can change everything with a game-changing announcement. I think we need to act on multiple fronts. What the budget needs to do is to ensure that the macro balance foundations of new growth recovery are well and properly set. I think the budget has done that extremely well. Also, to ensure that there's a sense of stability in the basic tax rates. I think the budget has done that also. So frankly, I think this notion that it hasn't pulled out some impossible rabbit out of some impossible hat, this is not, in my view, a very, it's not a well-informed kind of thing, if you ask me.
All right, a section of people believe it's a good thing he hasn't pulled out these rabbits from the hat, but Narayan Murthy, the budget clearly is not flashy, it lacks the fireworks. Do you still think it will be able to kickstart the economy, get the investments back on track, or do you believe it really lacks the fireworks to do so?
No, I think if you looked at it from the perspective of equity, fairness, and inclusion, I think this is a good budget. There is no doubt about it. He has done as good a job as anybody could have done it, and in some ways better than what most people could have done. But at the same time, as I pointed out earlier, for some good reason I'm sure they have, the Dream Team has not paid enough attention to making it easier for creating more and more jobs and creating larger and larger taxable revenues. That's all what I would say.
Mr. Musa, I remember in an interview about 6 months back, you expressed disappointment on retrospective taxes. The expectation was that he may undo the damage on retro taxes in the budget, but the FM chose to stay silent. Clearly, the government is not in the mood to undo retro taxes because it needs money. How disappointed are you?
Now, let me put it this way. I do not know the technicalities of undoing what was done by the previous finance minister insofar as GAR is concerned. Therefore, it may not be fair on my part to pass a judgment. However, having said that, I would have liked him to have made a definitive statement on withdrawing the retroactive aspect of that tax, and thereby giving confidence to foreign investors that India is on the move, that we want more and more of you to build infrastructure here, to create jobs here, etc.
Montek Singh Ahluwalia, comment on that, the point that Mr. Narayan Murthy is making, because this can potentially do damage to foreign investors, because this is something that they've been seeking now for a year, clarity on retrospective taxes, and that's still not there.
No, I think, many of these things are considered in the course of the budget session. It's quite possible that he will be in a better position to put the whole thing in perspective by the time the budget is finally presented. I think that on all those issues, the signals given thus far are positive. Action is not complete, but I would assume that investors read what he has done as indicating a very positive signal, and they'll wait to see what the final decision is.
Well, Swami, everybody is talking about how there are positive signals on retrospective taxes. Chidambaram is engaged in a conversation with Vodafone. He clarified today they are in conciliation talks. Did you expect him to actually change the law? Because he's got to make the shoe fit the size. Unless and until he changes the law, can he really do it? And he was rather silent on it.
No, I think he took the position that only in rare cases will they use the retrospective thing. Normally, actually, I think even Pranab Mukherjee made this particular statement, and I don't think they're going to give that up 100%. What did disappoint me was I thought they were going to say something on the transfer pricing issue, especially in relation to transfer pricing demands that have been made, like in the Shell case, when it comes to capital issues. Now, 50,000 crores right now is the amount of money tied up in transfer pricing litigation. And the total, I think, is 300,000 crores. I mean, so much money is lying in the courts. If you really wanted to make some easy money, some way of settling that particular sum of money, I think would have given easy, not only much easier revenue, but reduce the amount of harassment. I mean, so many guys, if you say, you don't put a penalty and interest, let's just settle it, huge amounts could have been settled, including the transfer pricing. But on transfer pricing, what really worried me was the Shell case, where you're saying on the issue of fresh shares, you're going to treat this as income. Whenever you issue fresh shares, in any accounting norms, fresh shares are a liability of the company, not income. How on earth can you put a tax on a liability?
Let me play the devil's advocate here, because on the Shell issue, he did issue a clarification there, and he said it's the rarest of the rare cases, and which is why I've asked the opinion for the Attorney General. I guess we'll have to wait for that opinion to come in for him to take corrective action. We take a break on that note, but we cannot finish this discussion without talking about electoral politics. And what has Chidambaram really done to woo his electorate? We come back with politicians on the show, Kapil Sibal, Rajiv Pratap Rudy and Sitaram Yechuri, along with Swami, to discuss that leg of the debate.
It's time to put the spotlight on the politics behind the budget. Was this really an election budget? We're heading into polls in a year from now. Has Chidambaram done all he could to woo the electorate in this budget as well? Let's introduce our panel that's joining in for this leg of the debate. Kapil Sibal, Telecom Minister, Rajiv Pratap Rudy from the BJP, and Sitaram Yechuri from the CPM. And of course, we've got Swaminathan Aiyar still very much with us here. Swami, your take has been that good economics has prevailed over bad politics. If that's the case, then this cannot be an election budget.
No, I'm making the case that this is an attempt to show that good economics can also be good politics. There has been a tradition that in an election year, you give away lots of populist freebies and this is the way you win an election. And yet in 80% of the cases when you do that, you actually lose the election. So I mean, whatever are the pyrotechnics on budget day is very different from what is the situation on the ground 12 months later on when the election is coming. And in many ways what really matters is the actual thing 12 months later on, when many of the budget pronouncements have been forgotten or almost forgotten. One of the most important things which will be pinned on a government, on the central government, is inflation. This is often forgotten. You can make any promises you like, but at the end of it all, if inflation is high, that is one thing which will kill you at election time. I think this particular government faced a real threat. The real threat was, had there been a credit downgrade by Moody's and Standard & Poor's, money would have flown out of the country, the rupee would have crashed to 60 rupees to the dollar. When that happened, all import prices would have gone up and inflation would have hit 15%. The real threat to Congress really was this. This is the threat that has been warded off. The credit downgrade is not going to happen. The rupee is not going to collapse to 60. On the other hand, there's some prospect it may actually strengthen to 53 or 54. That would exert a downward pressure on prices. I'm not sure what the inflation rate is going to be at the end of the year, because that's a long time off. But there is an actual prospect that if the inflation rate is brought down to something like 4.5%, 5% by the election time, Chidambaram would have achieved more through that to win votes than any other populist measures. I would add, of course, that even this, I'm afraid, will not be enough to win the election.
All right, may not be enough to win the elections, but let's get the politician on the board, and Chidambaram's colleague in the Union Cabinet, Kapil Sibal. I want to throw this question to you. Chidambaram's budgets are known to have this one game-changing idea. This one lacks one. Do you believe that the finance minister has lost the last opportunity he perhaps had ahead of the elections?
I think what the finance minister has done with a steady head on his shoulders and his feet firmly on the ground, to take into account the realities not just of the global market, but the situation in India. And in the context of the large fiscal deficit and the large current account deficit, try to balance between incentives to investment, increasing the savings rate, and at the same time having enough money for the social sector schemes.
All right, Rajiv Pratap Rudy, I want to take this question to you. Chidambaram has resisted the temptation of being populist. As the main opposition, do you agree?
Well, in last 4 years, this government has virtually made the government has become bankrupt. And even if they would have wanted, and especially in the backdrop of inflation and food inflation and overall inflation and the lack of investment in both in infrastructure and the social sector, I don't think they have enough to spend. And if they had attempted to do so, the country would have completely gone for a sakes, and the entire institution of finance in this country would have collapsed. As also you can see that the FIIs, the FDIs coming in this country has dropped drastically. And if you look at all the three sectors, whether it's agriculture, services or manufacturing, I hardly see any positive investments or positive effort by the government to see that these sectors get a boost. So it's basically a lackluster budget. It's basically a budget which does not excite anyone.
Right. Mr. Rudy, it's great to hear the BJP talk about FII, FDI, given the BJP's sudden opposition to FDI and retail. But I want to get the view from the left as well. Sitaram Yechuri, what's your sense? Because Swami here clearly believes that even in an election year, Chidambaram has resisted the temptation of being populist.
Well, I think most of the populism will come through non-budgetary announcements. But even in the budget, if you notice, there is two very important things which he's also highlighted, which will be the flagship for the next election campaign. One is the direct benefits transfer scheme, and the other is the food security bill. So these two, which he flagged off in the budget, but both will have to come through separate legislations before the Parliament. So I think the budget is not the platform that they're going to use for their populism, but it will be outside of the budget.
Do you agree with Mr. Yechuri here that much of the populism could come in the next 6 months? You know, I for one believe it's going to be tough for the government to keep moving with partial diesel decontrol. Hiking diesel prices every month, just a few months before the budget, is surely not going to be easy. At some point, populism will kick in, wouldn't it?
I mean, that would mean surrender. That would mean a lack of understanding of what you want to do. If the government has understood what it wants to do, look, you've already had one price increase in January, one in February. Have you had inflation going through the roof? The notion of cost plus economics, cascading prices, this is a false economics. I mean, there's the alternative of Milton Friedman who will tell you all inflation is only a monetary phenomenon. I won't necessarily go along with that. But yes, it is significantly a monetary phenomenon. Therefore, the idea that, every time you increase diesel prices by 50 paise, everybody will go saggy at the knees and begin to collapse. This is a fiction. When I became a journalist back in 1965, all oil was on import price parity. If the world price went up, it just went up. But at that time, there was controls on the steel price. So every time the steel price went up a little, there was a huge hue and cry. Why? Because you had politicized it. What's really happened in the case of diesel is we have politicized the price of diesel. That is why there used to be a big ruckus. If you merely say within the marketplace there is a certain adjustment to the reality of higher import prices, sir, that adjustment has taken place in edible oils, it has taken place in steel, it has taken place in a whole lot of other issues. Why not in oil too? It can be done if you take the politics out of it. So I think the government can stay the course on this particular one. I think I'd also say, Rudy said, the government was bankrupt, it had no money, so how could it do any populism? I think I'd say on that, it's worth noting that they are providing for an increase in planned spending of 29%. They didn't have to do that much. Part of that, you could very easily have diverted 50,000 crores of that to a populist scheme. They've resisted that part. Give them credit for that much.
All right, give them credit where they deserve, but let's keep the populism and the politics on track because Sitaram Yechuri made a point about food security bill. Kapil Sibal, do you believe this is UPA's big political bet ahead of general elections?
So I don't know why you look at everything in terms of politics. So when we talk about food security, who are we talking about? We're talking about ensuring accessible food grains, accessible food items, to people in this country who have no capacities to pay. Is that politics? I don't think it's anything to do with politics. It's something to do with the concern of the UPA to the vast majority of people who have no wherewithal to access essential items for life.
Fair point. Rajiv, Rudy, comment on the food security bill because, it's going to be tough for you to criticize this one. Do you believe it's a strong bill, even though it may be UPA's brainchild? Do you think it benefits the poor? 10,000 crore additional subsidy is largely affordable to the fisc as well. Swami says it doesn't disrupt the balance as well. Will the BJP support?
Well, we actually do not know the fate of the food security bill because the actual food subsidy bill, which is around 75,000 crores, and he has provided over and above that another 10,000 crores. But what is the shape of that bill, how it is going to be implemented, what is the format and how much resources they are going to. We are absolutely for any social programs which has to come. But Mr. Chidambaram has made a statement that this budget is not all. He's going to, is keeping few things close to his chest and that he would disclose it on when he replies to the budget, when it is to be passed. So I find this whole budget exercise which was done was actually half-hearted exercise. It was an attempt to hoodwink the nation.
All right, we want the politicians to fight on this show as much, but let's just take this discussion away from politics for a minute because we've got actually the telecom minister talking to us. Revenue mobilization, Mr. Sibal, is a big concern for the government given the present scenario. Even spectrum has actually ceased to be a valued resource. So where will money then really come from?
Well, first of all, if all ministries were to spend 5,50,000 crores, which is part of the planned budget, and with possible disinvestment proceeds of 40,000 crores, and spectrum which is going to be sold. I mean, it may not have attracted the market during the previous auction, but spectrum will be sold, and we will get money for it. That, along with without boosting investments in India, creating jobs in India, I think that we shall have enough resources to not just to finance this budget, but have enough money to look forward to a growth rate of 6.1 to 6.7% next year.
All right, let's also put the spotlight on the opposition. Mr. Rudy, the finance minister, spoke about the goods and services tax. He's earmarked 9,000 crores for compensation. How confident are you that the political logjam will break over this? Isn't it time that BJP supports the goods and services tax and gets this off the ground?
Well, he has talked about it. There's the discussion which is on, the group of state finance ministers who are working on it. I'm sure something is going to come out, but at this point of time, we'll see how the government moves about it.
All right, we'll see how the government supports it. Everybody's talking about the GST. They think it's going to be the big game changer. You do believe that Chidambaram has surrendered to the states?
I think Chidambaram has wisely taken the position that he cannot crack the whip on the states. That's very, very clear. It has to be voluntary. After all, you also require a constitutional amendment supported by all the state governments, which he does not control. So I think it's been clear from the start that this is not some process that New Delhi can drive. I regret to say the pace of what I see finance ministers doing, I do not find encouraging. Mr. Chidambaram has said, I hope we get all this thing done by the end of the year. Listening to Mr. Rudy right now, I don't feel enthused that this is going to be wrapped up within 6 months. It seems to me that there's a lack of seriousness about really going ahead, although nobody is really seriously against it.
We began by talking about how it is perhaps a case of good economics that has perhaps prevailed over bad politics. We go back to politics all over again, don't we, Sandeep?
Oh yes, absolutely. Supriya, before we wrap this up, there's only one man whose opinion I trust as far as the budget is concerned, and he's sitting with you, Swaminathan Aiyar. I'm suddenly feeling jealous. Swami, on a scale of 1 to 10, last word, you're the only one we're asking this to. How much would you rate this budget? Would you give it a 7 on 10?
I'll give 7.5 out of 10.
You know, actually, I think Mr. Chidambaram should be a happy man. A 7.5 on 10 from Swaminathan Aiyar. He should be sleeping a happy man tonight.
We'll leave it at that. Thank you so much, Mr. Rudy, Kapil Sibbal, Sitaram Yechury, and of course Swami for leading this discussion and leading the budget coverage on ET Now all day. It's been wonderful having you with us all day on ET Now. We'll wrap it up here. That's the verdict with Swami. He's given it 7.5 on 10. Thank you so much for watching this special show, Verdict with Swami, right here on ET Now.